Welcome to the inaugural episode of OBG Talk, a new collaboration between K24 Inside Business and Oxford Business Group that asks the country's key decision makers about the opportunities and challenges of investing in Kenya. My name is Robert Tashima, the Africa Managing Editor for Oxford Business Group. For more than 20 years, OBG has conducted on-the-ground, in-country research in the world's most dynamic emerging markets, from economies like Qatar and Thailand to Morocco and Mexico. As East Africa's biggest market, Kenya naturally fits into this pantheon. But how can Kenya realize its potential? What role do private investors play? And what does it all mean for the average citizen? Those are the questions we will be exploring today in OBG Talk. Today's episode will focus on Kenya's banking sector. Kenyan banks have been in the news a lot recently, and not always for the right reasons. But the recent troubles obscure the fact that the country has one of the highest rates of financial inclusion in the emerging market world and has more banks per capita than any other major African economy. It has pioneered new distribution methods and remains a world leader in mobile money. To explain both the obstacles Kenya's banks face as well as the potential they offer, we have with us today Habil Olaka, CEO of the Kenya Bankers Association. Habil, thank you for joining us today.
Thank you very much. Yeah.
Now, prior to joining KBA, you had experience working in a variety of functions at banks, from management to audit to risk. So you bring a uniquely broad view to the sector as a whole. As a result, I'd like to start off our first question by asking you, as a result of the recent incidents with Imperial Bank, with Dubai Bank and Chase Bank, what is your overall assessment of the health of Kenya's banking sector right now?
Well, I think especially after the Chase Bank incident, where there was a run on the bank and then central bank moved in and placed the bank under receivership. And this happens after two others had been placed in receivership in the previous year.
Right.
I think there was a general erosion of confidence and trust in the banking sector. We saw a shift of liquidity from some specific banks into some specific banks, and it was almost like beginning to become systemic. However, we should realize that the challenges that Chase Bank faced and the challenges that Imperial Bank faced and the challenges that Dubai Bank faced were very different and very unique to the specific institutions, to the extent that they were therefore not systemic. And the resolution of the problem when the Chase Bank event occurred, it therefore was appearing like it's becoming systemic, with a mass movement of deposits from some specific institutions. However, I think the way it was handled was very appropriate. Central Bank quickly came in, they announced a liquidity facility into the market, and that brought back the confidence that the market players needed,
right.
Both the borrowing public and the depositing public. They started getting that confidence. Some banks were already beginning to become jittery about extending the lines to the fellow bankers, and that now started picking up, and so we have seen things get back to normalcy.
Okay.
Now, the recent announcement of a solution towards the Chase Bank problem has even brought in more confidence, because you have got a homegrown solution that is being put forth as a solution to resolve the Chase Bank problem.
Okay, so these are not systemic problems, you say. They are sort of short-term.
Yes, unique to the specific individuals, yes.
Okay.
Yeah.
Now, sort of tied to that, obviously, one of the key challenges that the banking sector has faced in terms of being able to increase financial inclusion has been interest rates. Now, that's not unique to Kenya. It's obviously a challenge across sub-Saharan Africa. Interest rates in West Africa, for example, often exceed 20%. Now, Kenya is not at that level, and certainly there have been recent reforms in terms of the new reference rate and the APR. What sort of impacts have those reforms had in terms of improving the access borrowers might have to credit?
Okay, one of the, you're indeed right in terms of the fact that the rates in Kenya are higher, even though comparable to other markets, it may not be, as punitive. However, as an industry, we came together and decided that we need to do something about the rates. But the solution to the whole problem is multifaceted, because there are various areas that contribute to the high rates in the country. One of them was to introduce some element of transparency in the pricing by the banks. And so we developed, together with Central Bank, we developed a reference rate that was going to be applicable across the whole industry. And that's the Kenya Bank's reference rate. In addition to that, we also introduced the idea of banks quoting the annual percentage rate, which besides the interest rate, it also includes other costs that the borrower incurs in getting the facility. And that was in a way trying to introduce transparency so that the customer knows that the only cost he misses is not just the interest rate, but the other cost that he might incur in getting the facility may actually make the facility more expensive when the interest rate is on the, appearing to be low.
Right.
So the two the two initiatives have been picked up in the market. If you look at the Kenya Bank's reference rate, it has been now applicable because we introduced it in July 2014. So by end of 2015, it had been there for 18 months.
Right.
The impact of that plus other measures that have been put in place, there's been a general decline in the interest rates in the market. However, there's a perception that the consumer has not quite actually felt it. And the reason is because in 2015, especially in the second half, there was quite a bit of macroeconomic volatility in the market. Inflation started edging up. The treasury bills in particular picked up towards the second half of the year. And treasury bills affects the cost of money in the market. So banks then got their deposit rates beginning to pick up, and so they had to transfer the same to the borrowers. So in a way, towards the second half of 2015, there was that macroeconomic instability, but that was brought under control. So that at the beginning of 2016, we saw the stability beginning to pick up. Central Bank had managed to especially put under control the inflation threat.
Right.
And so beginning 2016, we are seeing the macroeconomic stability settling in. The projections are that the same trend will be continuing, and so we expect the trend on the interest rates to again start trending downwards.
Great.
2016 going forward.
Well, I'd like to take a step back in that case, and obviously with interest rates declining, that should help certainly improve financial inclusion more broadly and banking penetration. But Kenya already has been extremely successful in terms of ensuring a high level of financial inclusion. I mean, I think 3/4 of the population has access to some form of formal financial services. That is really remarkable when you compare that to other economies on the African continent, or really even other economies in Asia and in Latin America. What are the reasons for that? What are the causes for that success?
Yeah, actually we have, as a country, I think we have made some good progress. As you mentioned, if you look at the figures in terms of the population of Kenyans that were excluded from formal financial services in 2006, for example, it was about just about 40%. Now, move forward 10 years later, 2016, that number has moved down from 40% to about 17%. So there's remarkable improvement and in terms of our financial inclusion agenda. And in the banking sector, we'll attribute this to two factors that I can mention. One of them is a convergence between mobile network operators and the banking system through mobile banking. Because mobile banking has pushed the service delivery for the banks from where we were, it has moved it to another level. Initially, mobile banking was mainly used for payment services.
Right.
So you move money from one point to another. But we have moved that to another scale where now banking services are being accessed through these channels. So now banks are able to, for example, provide credit on the mobile.
Right.
Banks are able to mobilize deposits on the mobile. And it's even extending further to other services besides banking, like, for example, insurance. We have got now insurance being offered on the mobile. And I'm sure within the capital markets, it will soon be extending there.
Right.
So really, mobile banking has really assisted in advancing our financial inclusion agenda. The second factor that I'll attribute that to is what we call agency banking. The convergence between banking system and the infrastructure owners. That's where banks use the available infrastructure, be it supermarkets, be it petrol stations, be it pharmacies, be it supermarkets, to be able to get the customers to access their services. That has worked very well because if you look at, for example, end of 2015, we had almost more than 40,000 agents already recruited. And this is still progressing where we have more banks coming on board to take on that agency banking model as their way of accessing the unaccessed Kenyans currently.
So does this herald the end of the brick and mortar branch in Kenya then? Are we seeing a shift from traditional bank branches to these alternative forms of distribution?
I think the progress towards financial inclusion will be more or less leveraged on these other modes in terms of channels for customers to access the banking services. Because as you see, the new modes, the mobile banking, the agency banking, are more efficient in terms of the amount of the cost per service delivered or per dollar of service delivered is much lower, and therefore the old model of brick and mortar I think will go down. If you look at the number of branches that banks are opening, they're not as much as the number of agents, for example, that the banks are employing. How much investment is being put into their mobile banking platforms is quite significant. And so the shift is from brick and mortar into the new channels of accessing banking services.
I see. And with that increased financial inclusion that has come about over the past decade or so, and the changes in distribution methods, has that caused any weaknesses in the volume of non-performing loans as well? How concerned are you about non-performing loans in Kenya's banking sector?
If you look at the statistics, Central Bank released statistics sometimes last week, and if you move back, say, to February 2015, the ratio of the non-performing loans to the gross portfolio in the banking sector was 5.7 in 2015. If you move forward to February 2016, that ratio had moved up to 6.8. Which means that there was a 1.1% increase. By itself, it doesn't look scary, but because on one, we know why that number has increased to that level. And part of it is because of the fact that there were, as I mentioned earlier, there were economic challenges in terms of challenges in the economy. The macroeconomic volatility that you mentioned about, which effectively means that a number of customers were challenged in a way that they were not able to meet their obligations.
I see. And
so the tendency for the NPLs to pick up is higher. And there are some specific sectors which we know, for example, tourism, which was badly hit in 2015, and that will definitely show in the portfolio. For example, contractors who had indeed been contracted by, for example, the government, and there was a delay in terms of payment, banks have had to provide for that portfolio. The general erosion of the slowdown in the economy in 2015 affects mainly the SMEs, for example. So banks that had a significant proportion of the SME portfolio will start seeing a slowdown in repayment, and therefore the necessity to reclassify the portfolio as non-performing. So we know why the non-performing portfolio may have moved from the 5.7% to 6.8, and there are specific issues you can be handled. So it's not cause for alarm, but we know that we have to be alert to the fact that indeed there is a deterioration in the portfolio.
I see. Well, it sounds like overall then the prospects for the near-term perspectives of growth in Kenya's banking sector are fairly encouraging, and that some of these challenges that we've seen over the past 18 months or so with the problems of Chase Bank, for example, and the increase in non-performing loans are really sort of idiosyncratic and short-term in nature, and that in fact the broader term outlook is quite encouraging. Excellent. Yeah. Well, Habil, I'm afraid we've run out of time, but I really appreciate you taking the time to come down and chat with us. We've obviously, I think, gotten a lot out of this, particularly in terms of not only understanding the reason for Kenya's strong performance in the banking sector over the past decade in terms of improving inclusion through mobile banking and alternative distribution channels, but also in terms of teasing out the elements for why some of these recent issues and problems have happened, and more importantly, how they're being addressed and how they will be avoided in the future. So Habil, thank you very much for taking the time to join us here on OBG Talk. And to our viewers, thank you for joining us, and we look forward to talking with you next time.